Hello everyone and welcome. The crypto market is at an absolutely pivotal moment. Bitcoin has just smashed its all-time high, but this isn't just another price surge. What we're all witnessing right now is a truly fundamental shift. So in this explainer, we're going to break down the three powerful forces that are converging to make this time completely different.
So what's the next major target that's squarely in sight? $120,000. But again, you have to remember, the price is really just the symptom. The real story, the cause, is so much bigger and way more fundamental than just a number on a chart.
And that right there is the core idea. We are not just in another bull run that's being driven by hype and speculation. No, what we're seeing is a deep structural merger of crypto right into the traditional finance system, or as we call it, TradFi. And this merger is being powered by three massive forces, all hitting at the exact same time. So let's dive into the first pillar.
All right, pillar number one, TradFi's $20 billion unlock. Now, this is arguably the most important development we have seen this entire cycle, and it's all about a massive new wave of liquidity coming straight from the heart of traditional finance.
This is the headline that changes absolutely everything. JP Morgan, a cornerstone of the entire global financial system, is now allowing its institutional clients to use Bitcoin and Ethereum as collateral. This isn't just validation, folks. This is integration. We're watching crypto move from just a speculative asset that institutions can buy to a functional asset that they can actually use inside their core risk management systems. It's a total game changer.
So what does this actually mean in real-world terms? Well, industry observers are estimating that this single move by JP Morgan could unlock $20 billion in real, functional liquidity for the crypto market. And we're talking about new capital that's ready to be deployed, not just sitting on the sidelines parked in an ETF. Now, this is where it gets really interesting, because you have to understand the distinction here. The ETF inflows we've been seeing, they're fantastic, don't get me wrong, but they mostly represent passive, speculative capital that just kind of reflects market sentiment. The acceptance of Bitcoin and ETH as collateral is a completely different beast. This is structural integration. It's capital being used actively in the financial plumbing, which validates the legitimacy of these assets on a whole new level.
Okay, so we've got institutional integration. Now, building on top of that is our second pillar, the macro green light. The broader economic environment is just becoming extremely favorable for risk assets like crypto.
And this paints the picture perfectly, doesn't it? The market is now pricing in a 98% probability that the Federal Reserve is going to cut interest rates. And as rates go down, the hunt for yield just intensifies, which makes assets with higher growth potential like Bitcoin and Ethereum that much more attractive.
But listen, it's not just about rate cuts. The other side of this coin is the likely end of something called quantitative tightening, or QT. Now, QT is basically when the Fed shrinks its balance sheet, which effectively pulls money out of the system and creates this drag on the markets. So the key takeaway is this. Ending QT is like taking the brakes off the economy. It removes a massive headwind that's been holding risk assets down. The third and final pillar of this perfect storm is coming from a place that, let's be honest, has long been a source of anxiety for the crypto market: Washington, D.C. We are finally witnessing a major regulatory thaw.
And it is so important to remember this. For years, the single biggest barrier for institutions getting into this space has been regulatory uncertainty. Well, that fog is now beginning to lift. And as this quote says, clarity is the most powerful catalyst of all.
The huge news here is the nomination of Michael Selig to lead the CFTC. This is a massive deal because Selig used to head the SEC's crypto task force. What this signals is a potential shift away from the SEC's regulation by enforcement approach, the one that views most crypto as securities, and towards a much clearer commodity-focused framework under the CFTC. And that's an approach the industry has been begging for years.
Okay, so we've got institutional integration, a macro green light, and regulatory clarity. The three pillars are firmly in place. So the next logical question has to be, where is all this new capital actually going to flow?
Let's break it down. The most obvious beneficiaries here are real-world assets, or RWA, which is all about tokenizing things like private credit and, of course, institutional DeFi projects. They are the direct link to that JP Morgan news. We're also seeing some really strong independent momentum in the XRP ledger. And finally, any progress on the Genius Act, which is a proposed bill to regulate stablecoins, would be a massive tailwind for the networks that they run on. But for right now, let's look at where the money is currently sitting. Bitcoin dominance is very high. It's hovering around 58 to 59%. And what that tells us is that capital is still playing it relatively safe, concentrating in the market leader, Bitcoin, as it soaks up all these new inflows.
Which, of course, leads to the million-dollar question for so many investors, right? When is this capital going to start rotating out of Bitcoin and into the broader altcoin market? The key signal you want to watch for a potential alt season would be watching that Bitcoin dominance number start to fall while Bitcoin's price stays strong or even continues to climb.
And when you look at market sentiment, there's still plenty of room to grow. The Fear and Greed Index is only at 40, which is still in the fear territory. So while sentiment is definitely improving, we are nowhere near the levels of extreme greed that usually signal a market top. This caution is actually really healthy and suggests this rally has legs.
Okay, let's pull all of this together into one final clear takeaway. What is the big picture that you should really be focusing on right now?
So, the most crucial point is this. The market is in a firm uptrend, and it's not based on just hype and speculation. It is being fueled by a perfect storm of three powerful real-world catalysts. You've got institutional integration from JP Morgan, macroeconomic easing from the Fed, and emerging regulatory clarity coming out of Washington.
Looking ahead, here are two key things to keep an eye on. First, any news about the progress of the Genius Act for stablecoins could be a huge market mover. And second, definitely keep an eye on that on-chain data over the weekend. If you start seeing large whale wallets accumulating before the traditional markets open back up on Monday, that would be a very strong bullish signal.
And that brings us to our final thought. The integration of traditional finance is no longer some theory. It's happening right now with real-world asset tokenization right at the forefront. So the big question for you is, after JP Morgan's groundbreaking decision, which RWA altcoin do you think is positioned to be the biggest winner from this massive shift? Let us know what you think. Thanks for tuning in.